All right, so today is December 5th, 2022. Is a Monday, and we got, just one big news coming out here on 10 a.m. It is the Fast Service PMI, Purchasing Managers Index. Probably the biggest news we got to see for today. It's already happened, but essentially that's the only thing we look out for. So with that being said, let's go on to the charts and let's reanalyze what we have done today and what potentially we have missed, and the overall areas that we want to look out for in future precautions. All right, so up here, let's see when price first coming in. You can look at here on the 15-minute chart on the left, but essentially I mark up previous daily high, previous daily low to know where the overall range are. But most of the time it doesn't matter as much, right? It's just to know where the price is trading around, so it can maneuver and just kind of like a dynamic level, I guess. But yeah, essentially we draw Fibonacci from the low to the high, all the way here from this low, like all the way down here to the high, like a big order block, big the big order blocks and Lego structure, and from all the way to from the low to the way to the high, and the 50% is around here, which price is trying to reach. So we always gravitate towards the 50% when price is trying to transition like this. So immediately off the charts, you can see that price broke out the previous low, and then it come. Holy shit! Okay, that was loud. Um, yeah. So you get immediately off the chart, you can see that price broke through the previous low. Price come back up again to satisfy the premium price, and pretty much sell down from there. So immediately I would see this as price are selling out, is having extreme selling pressure just because it has broken through the previous low and it's still remaining in between this area here. We might or might not see a continuation continue, or continuation continues. Fuck. We might see this area have a transition or a continuation depending on, of course, the price action, right? So this is the area we happens to be in, so we just need to wait to see if price have that pressure to push down, or it has a buy side liquidity level at 15 or 1 hour OB here. Um, 1 second, yeah, a 1 hour OB here to basically push price up once again. But overall structure, a little bit macro here. Price have broken through a previous low, have been retraced, and is currently wanted to push through here. That's the objective, or the overall pressure of price is going to push and being bearish at the moment. My bad. My nose is still hurt. My nose is still being like this. All right. So looking to the left here, let's toggle this for a second. You can see that we still have a little bit of space to swallow. It's not too significant, but just keep it by. Okay. Just keep in mind that this area is still, like a relative void. Price can fill in, and we happens to be at around 8:38 to 9, so it's around this area here. In the middle of the chart, you can see price, like I said again, is retraced up here, right, and then it's pushed all the way down, and it's currently residing in this area here. We have a 15-minute and 30 minutes. I marked 30 minutes down first. We are in the zone of interest, both sides, so these are multiple entry zones. So basically there are multiple entry zones in this area, right? There's the 15 minutes and there is the 30 minutes. So there are multiple entries that price can potentially have a reverse and transition upside, right? But if it continues to push continuation, it should be fine. But essentially, the first entry we need to look for, the first zone, which is the 15-minute, we need to look for a clear transition before we can buy in. The second one we can be a little bit more loose because it's marking the final destination, but we still need to look for a transition, right? It's more strict on the first one because it has a bigger room, right? That's why Fibonacci, the whole purpose of Fibonacci retracement is to lower the stop loss. All right. So with that said, right? Price come down here. We have 15 minutes right here. So I'm just aiming for the potential of price that can, form a transition and then basically potentially reverse in within the zone around here. That's why I marked, right? And first trade, of course, I always want to take a 1 to 3 or the closest to 1 to 3 or something a little bit over, but it matches the candle hint, or it matches the structure of price, right? But it's around 1 to 3 or 1 to 3 take all on the first trade and just wrap it for the day. So yeah, from this structure here, you can see on the 15 minutes onto the left here as well. So let me put over there so you can see. And let's zoom down to 5 minutes now. No, that's the wrong chart, wrong side. Let's go down to 5 minutes with that in mind. So 5 minutes here, you can see that this is the area, right? You can see that price have broke through, maybe, right? But in some cases, you see on the left again, confluence, right? I make this mistake when I first started. I see, oh, it broke the previous high, right? Previous high. Oh, this one here broke through the low, but then it go up here again, breaks through the two previous highs. That means that it can potentially push through. Yes, it can. So that's just the uncertainty of price. You don't know where it's gonna go. You just know the general direction and the trend of the market. In which case, again, the macro trend on the 1 hour is bearish because it's retraced here. It broke through the previous one. So sometimes you can see the educational, charts on YouTube or any courses. They will give you an example and they don't zoom out enough to see the overall leg. They would take an example here, right? And if it works out here, breaks to go to previous low, come up here again, break to two previous highs, two previous low here, previous high broke through, come back here. If it works out around here in the left the area, that's the example that what they would take. So I always look for you'll look into the back. What's the macro time frame saying, right? What's the 1 hour or the higher saying? So right here we broke through the 1 hour and the price coming up here, retracement push all the way through and down once again. We push through once again and then potentially residing in this area here, and the pressure is still maintaining bearish, right? It's still maintaining bearish to actually transition the price and push it upside once again. It needs to have a really clear transition instead of just a loose area. So I've already written down the stuff that I want to write on this box. I'm gonna read it in a second, but yeah, again on the 5 minutes, try to stress this once again, right? 5 minutes is the final destination if there is no order block under it, in which case here you can see that there's a 5 and there's a 30 minutes under here. So you need to see and wait for an area of transition essentially. It's just a counter trend, kind of a counter trend from a Fibonacci retracement. So we just look for an entry around here. So zoom all the way down. And 1 minute, 1 minute is just for like precise entry. It doesn't matches a lot of things up. Um, it does kind of give you a confluence, but at the end of the day, the 1 minute time frame is not structural based, and you shouldn't just trade on the 1 minute because not a lot of people trade on 1 minute, right? Most people are going to just use 5 minutes to gather entries, and 1 minute is just for structural purposes. It's just for minor confluence that can potentially see on the various levels and the signs that you can make an entry with less uncertainty. You can make an entry with more certain in your mind that it's gonna work out. So with that said, I'm on the 1 minute time frame now. So price come into the 5 minutes 5 minutes OB here. You can see and it left the level just a little bit. It pushed up a little bit because, like I said, there are buying orders around here, and it did push up once a little bit. But this is area I already marked it up. But essentially, you need to look for a transition, right? You need to look for a good transition, and so price coming up here is still maintaining this high, right? Even though it did not trade through the previous candle. I zoom out to the other time frame. So on the 3 minute, there isn't anything. On the 5 minutes, you can see here that there is a wick up here. So I want price to at least break this level. And what it does is that it did not really, poke through it the first time. It comes up here and it retraced down, still respecting the previous wick, and it come back down once again to respect the Fibonacci into discount price. And then this is where I goof myself, right? This is where I goof myself, and being honest here, trying to learn from my mistakes, not trying to hide anything. I come down when price come down here. I was convincing myself that, well, the bear structure is already there, right? The bear structure, everything is already there, and it's just basically matching up with the trend. And it did not respect this level here, and it's kind of like ranging around, right? It ranging around, and essentially I can just convince myself to take a sell here. Well, it contradicts my personal values of trading and strategy as a whole, because I still want to be in this range, right? I still want to be in this range for a potential area that it can reverse. I want to trade when in within the range, so that even if it breaks out, it doesn't matter as much. And so this is not a 1 to 3. This is a 1 to 3 right here, pushing all the way down, which doesn't have really that much structure in Fibonacci to base off of, right? And another major thing is that I just sell in the middle of nowhere. I sell in the middle of nowhere, right? Even on the 5 minutes, man, I hate this zooming back and forth. Even on the 5 minutes here, you can see price is still forming. On the 3 minutes as well, price is still relatively forming, right? And so I just sell in this area here with pretty much little to no confirmation. I just enter in here because it matches up the trend and did not respect. That's the only two thing. It did not respect, or it did respect, but it did not break through this level. It respected it, my bad. It respected the wick and the zone itself, and it's matching up with the trend. That's the only two things that I base off of, which is not significant for an entry. And this is clearly a mistake, so I mark this as a preventable loss. And just keep in mind for the future that in these levels, just wait for an actual area, because you have a whole 2 hours, right? A little bit over 2 hours to look for a different entry. So why should you enter here on an unclear area which doesn't match up most of the criterias, right? So with that said, the next trade here, um, I would say this is I would say this is a good loss. I would say this a loss that can be incorporated with the overall structure, overall area itself. But at the same time, the strategy is to wait for good confirmation. And so this is a kind of mistake itself, because price basically form here. I'll read this box so we know things out of the way. Watch out for signs of losing pressure. In this case, buy side pressure or liquidity. Short term low, which is this 1 minute OB marked, um, was not respected. In addition to the bearish market, price favors the bear and continues to push into a lower 30 minutes OB, which is down here, right? There is another magnet down here, bigger magnet down here that and it's kind of like gravitating or stuck in the price and trying to push the price down, right? It's a bigger pool of liquidity down here, and so it's just kind of like a mini area, for so to say. And so this is basically, again, you need to look for a price of respecting this level, even though it broke through the previous high, right, of the previous short-term high on the left. You need to wait for 1 minute closer and within this 1 minute OB, so that it is basically a good area for you to take an entry. Just wait for 1 minute to close within the 1 minute OB here. And so I did not wait for that, and I was eager. Again, another preventable loss, but I marked this as default. I marked this as an area because, in some cases I would choose to just buy in, but now, this is a preventable loss, half half. So this is, again, just wait for 1 minute in future reference. Just wait for a 1 minute candle closure and within the area you want to see. That's pretty much it, kind of preventing the stop loss in general. But after that, price broke through, and it continued pushing all the way through and broke through all the previous short-term lows. And you can see here that after the price have broken through, the pressure have been relieved, right? This one here was not respected. This is a level that we want to be respected. It was not respected, and it being broken through. At this point, it's now confirmed, or having more price, more signs, instead of just the first two, which is trend marking. It was not respect. Now it adds up another one. right here, it did not respect. It broke through the previous low that we want to see respected. It would not. It was not respected. It got broken through, and that said, it adds another confluence into the price. Adds another confluence in, and now price is basically hovering around this area here. And so I just basically an adjustable trade that we can take, which from the 1 minute OB here that can ride the price pushing all the way through, kind of like a rook trade, but essentially it matches the candle hint over here onto the left that around here swallowing price on the 5 minutes. I'll show you guys swallowing of the price on the candle hint of the wick, and that pretty much it for the first trade, the actual first win. And essentially after that, price retrace around and then continue upside once again. Retrace here. This is a potential second entry onto the Fibonacci of the 70.5, which is the optimal entry. There is a 15 minutes OB here as well. So essentially, it is around that zone where you can potentially take a second trade. Fibonacci retracement match up pretty nicely, and the 70.5, and it matches the 1 to 3 risk reward ratio. Now that it is confirmed, the price is gonna still push through once again, right? Because this is just a 1 minute 1 minute order blocks around here. It's still respecting the overall Lego structure, and 70.5 we can just take a trade from here because it confirmed the price is pushing and bearish structure is very strong instead of the bull. And so we can close this out before news, which is around 1 to 2 risk reward ratio. And minus 27, the projected trade is still matching up. That's the whole purpose of it. The projected trade is matching, and that's the potential two trades of the day, right? And after that, price just pretty much pushed through and having formed some structure down here, which is after the news. And right now it's already 11. It's 10:55, 56. Is 11 right now. Price basically formed, just broke through the previous short-term high. Let's see if we can enter a trade here on the recording. Maybe not. Fibonacci was not respected. There's a 1 minute there. There's a 3 minute, 5 minutes all the way down here. So we may not see an entry from this point on. But just keep in mind that in the future, try to incorporate it in. Try to incorporate the 1 minute and try to wait for 1 minute closure, as well as when you see the price still very much bearish and it confirms that the price was not respected. The level that we want to see buy side liquidity respected was not. It has broken through. You can just take a sell right there when price just broke through and it has an order block or some kind of structure. In which case, I will take an order block and then ride price down for a little bit. And just that's pretty much it. And then again, this is a structural trade. Right, 70.5. There's no order block. There's a 1 minute here. It broke through, but it's still within the zone. Again, it's just a benefit of the doubt of the stop loss. You need to put it large enough so that price will have room to wiggle, right? So 70.5, and then stop loss above the 15 minutes OB and ride the price down again. Close before news, the PMI, and after that, price push all the way through once again. So that's pretty much it for future preference. Just wait. Just wait for a clear. Just wait for a clear sign or something that have matching up. Essentially, the price structure. You need to see structure matching up instead of just trend, instead of just not respecting. You need to see some kind of structure being broken or some kind of structure, being formed that can transition the price and clearly states that it's gonna just that is gonna travel in that direction for the time being, right? But yeah, that's pretty much it. This Monday, and I'll see you tomorrow. Start strong and stay motivated.